Hello traders and welcome back to the Forex Geek where we dive deep into the tools that can help you make smarter trading decisions. In today's video, we're going to be talking about the momentum reversal strategy, which is a powerful approach that allows you to spot when market momentum is shifting and position yourself at the start of the potential trend reversal. So whether you're looking to catch the next big move or avoid getting caught on the wrong side of a trade, this strategy could transform the way you approach the market. So stay with me until the end as I break down exactly how this works and show you how to apply it step by step in your trading. So without wasting any much of your time, let's get started. Let's dive straight into it. So the momentum reversal strategy is a trading approach that focuses on identifying points where the market momentum begins to weaken, signaling a potential reversal in the current trend. This strategy capitalizes on the natural cycle of trends, which rarely moves in a straight line indefinitely. Instead, trends often lose strength before reversing direction. And this creates opportunities for traders to position themselves early in a new trend. For example, we had a trend here: higher highs, higher lows, swing highs and swing lows. Then we had this reversal to the downside. Now, traders who were able to tell this momentum shift, which happened around here, would have been in this short trade, which lasted for months. Now, how can we tell that momentum is shifting? How can we tell that we are going to reverse? Now, that is what I'm going to teach you in this video. So ensure you watch until the end. Key components of this strategy is momentum indicators. We use tools like the RSI, the MACD, and the stochastic oscillator to measure overbought and oversold conditions. These indicators help traders identify when momentum is likely to reverse. Also, we use divergence analysis. Traders look for divergence between price action and momentum indicators. For instance, if prices are making higher highs while the RSI is making lower highs, this indicates weakening bullish momentum and a possible bearish reversal in sight. For that reason, we'll be using the RSI as our case study for this momentum reversal video. All right. So for the step by step, we're going to be the first step is to just determine the current trend. What trend are we currently on in the market? As you can see, before we had a reversal, we were bullish. We were clearly bullish here with this. And you can also determine the current trend using tools like the moving averages. You can add the moving average, the 50 period moving average to determine the trend. I'm just going to add the exponential moving average to determine our trend. This is the very first step to every strategy. Determine the overall trend. Are we bullish or are we bearish? So I'm checking for whether we are bullish. If price is above the moving average, it means we are bullish. If price is below the moving average, it means that we are bearish. On the 50 period, you can see price was mostly above the moving average, signaling bullish momentum. If I increase the period to about 100 or 150 period EMA, you see that price was entirely bullish this whole time. And that's the first step. After this, the next step is to look for signs of momentum exhaustion. Once you've identified the trend, use momentum indicators like the RSI to spot overbought or oversold conditions. For example, RSI reading above 70 suggests overbought conditions, while RSI readings below 30 suggest oversold conditions. Additionally, you can check for divergences, but I'll talk about that later. Let me first of all talk about overbought and oversold. You can see price action here giving us multiple overbought conditions here. That's the RSI being above 70. At the same time, we have price here giving us this bullish push. And all of this was just signaling that we had multiple overbought conditions. I have one here also. Price was constantly above 70, and this signaled overbought conditions so much that we'll be looking for opportunities to sell. Why? Because it just signals that the bullish momentum in this market right now is weakening, and we should be looking for uh, bearish opportunities. We're looking for a reversal, an opportunity to reverse. And this is also confirmed by price action analysis. which is another major way to confirm reversal signal. After checking for um, the second step, which is checking for momentum exhaustion over both conditions, RSI above 70 or below 30, oversold conditions, and all of that. The next step is to check for reversal signals. For example, reversal signals could be candlestick patterns like hammer, engulfing patterns, doji at key support or resistance levels. Also, you can check for popular patterns like our double top, which is exactly what happened here. Our double top pattern, we had the first top, or we have the M pattern. You can also call this the M pattern. An M pattern is a major reversal pattern, and you can use this to confirm, are we really reversing or is this just a continuation? So here we use the M pattern or the double top. Some traders also like to use the Quasimodo candlestick, the Quasimodo pattern, which is just this price moving and price just breaks the previous low or breaks to the downside. It's not supposed to go below this low, just change of character and push back up. Some traders like to also call it the head and shoulders. All of these are reversal patterns. A price is no more moving to the upside, now moving to the downside, or price no more moving to the downside, now moving to the upside. All of these help to confirm momentum reversal. So after this, after confirming your reversal signal, the next step is to enter the trade. We have one final confirmation with price moving below the moving average. Also, we have this divergence showing in the market where the RSI is giving us lower lows and lower highs, but price here was giving us higher highs and higher lows. Is actually in the second step. And all of this shows exhaustion. All of this shows signs of momentum exhaustion. So we should just be looking for ways to enter the sell trade. And remember, I talked about engulfing patterns. We can see one engulfing pattern there, bearish engulfing pattern, very clear. See one engulfing bearish pattern there. So just look to take our sell trade. After that, remember we are below the 50 period EMA. Stop losses above that high and take profits all the way down. Remember, the first step is to determine the trend. Are we bullish or are we bearish? Then the next step is to look for signs of momentum exhaustion, and that is the most important part. This involves looking for areas of overbought and oversold conditions, and also looking for divergences between price action and the momentum indicator. In this case, we are using the RSI. And this just happens when price is making higher highs, but the RSI is making lower highs. Or in the other case, price is making lower highs, but the RSI is making higher highs. Let me look for a bullish example which I would use to explain better. Now you can see that we are bearish. The first step is to identify the trend. Are we bullish or are we bearish? Here the market is clearly bearish, clearly. And we have multiple taps, multiple break of structures to the downside, and all of that. So the next step after this is look for signs of momentum exhaustion. We have several indicators here with the RSI giving us oversold conditions. We have oversold condition here, multiple. Okay, there's a mistake there. Look at it here, and this is another sign of exhaustion, momentum exhaustion. And all of this, you can see them, all of them happening at these lows. At the same time, you can see that price is giving us lower highs, but the RSI in this case is giving us higher lows. This slight bullish movement here, very slight, but very carefully selected. And also, you see price, we also have here this oversold condition here also. All of these are just ways in which we just spot the signs of momentum exhaustion, which are very important when trying to trade. We also have here price being really close to being oversold. All of these are just points in which we can use. Now you can see after this divergence which we had here, price started reversing. Price went above the 50 period moving average here. and maintain an uptrend, failing to go below this swing low. The next step after this is to confirm for reversal signals, including candlestick patterns and normal chart patterns. We have here a Quasimodo, very classic. Remember I talked about the Quasimodo, which is price being in a trend, but then breaking above the high is not supposed to break above, which is change of character, a pullback, and then a continuation to the upside. Some call it the head and shoulders, and you can see that happening right here, which is very clear. We have this break, this change of character here. Then we have the pullback back into support. Traders who trade with liquidity, you can see this clear area of liquidity which was swept by the market. And after that, we then had the push to the upside. All of these are indications which we can use to place our entries. A trader who doesn't know Quasimodo or who doesn't know about heads and shoulders or possible reversal signals, I would advise you go through our channel and watch all our videos. We have all of this explained on our channel, but you can also use simpler strategies like candlestick patterns, engulfing patterns. We've also explained candlestick and chart patterns, all of them on our channel. So we have here candlestick patterns here, and also have price moving above the 50 period EMA. All of these are just indications where we can use to place our buy, stop loss below that low, and take profits all the way up. Targeting take profits, we could look to target previous resistance levels like this one, or we could also target this one right here. Remember, we're talking about reversal. Is the market reversing totally from bullish to bearish, from bearish to bullish? These are areas where we can set our take profits. So it's very simple. This is the momentum reversal strategy. Advice you manage your risk is very critical. Use a risk reward ratio of at least 1:2 and set clear profit targets based on near support or resistance levels, just like I did. And you can also use trend and stop losses to lock in gains as the new trend develops. Exit your position if price reaches your profit target, if momentum indicators show signs of another reversal. How can we know signs of another reversal? You can see here the market being overbought at this level. And that is another area we can clearly exit our trades. So just exit our trades right there when we had that overbought condition in the market. All of these are just ways in which the market shows us its hand before moving, or before reversal, or before a pullback. And now we'll just look to take profits at this area. And you should also exit your position if price action struggles to maintain its new direction. So right, traders, you've come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, don't forget to like, subscribe, and turn on the notification bell so you never miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.